Hello and welcome to this week's vlog with me, David Jones, and Trading 212. This is for the week commencing the 17th of April. As usual, what we're going to do is take a look back at what was happening over the past week, what was moving markets, a look ahead to what we should be maybe keeping an eye on in the days to come, and also spend a bit of time talking about strategy. And this week we're going to expand quite a bit on what we talked about last time round when we talked about the RSI. We're going to look at a different and maybe more reliable way of using the RSI. But first of all, last week, it was a bit of a mixed bag of a week. We saw US stock markets still under some pressure. We did see rallies along the way, but ultimately the sellers came back in and pushed this down. But maybe the bigger moves we saw were in currency markets on the back of dollar weakness. And this was, I think, partly fueled by President Trump saying that maybe the dollar had got a little bit overvalued. And of course, a strong dollar is no good or makes US exports look quite expensive. So I think that did help fuel some gains in the likes of euro dollar, pound against the dollar. And of course, the price of gold, which we were talking about last time round. Gold pushed out once again to its best level for quite a few months. So a very, very strong performance there. But looking ahead to this week, we've got some European inflation data coming out on Wednesday morning. So we could see a bit of volatility off the back of that. But maybe once again, the thing to watch is political rather than economical, because over next weekend on Sunday, we've got the first round of the French presidential elections, and the polls show that it could be quite a close run thing. And if we've learned anything over the last year, it's the effect that these political events, such as the European referendum here in the UK, the shock result by President Trump in the US, can have a big impact on markets. So we could see potentially quite a bit of volatility, maybe French stock market, European government bonds, and of course, euro against the dollar. So that's going to be our focus for this week. We're going to take a look at euro dollar in the run up to this election and maybe some levels to keep an eye on. But before we get into all of that, let's talk about our strategy. Last time around, we talked about the RSI, the relative strength index or indicator, and how it can show overbought or oversold when the market's gone too far, too fast. But there's another way of using this, and that's looking for divergences. And that's where maybe the market's doing one thing, but the RSI is doing something else. And it can help us identify potential major turning points for trends. So first of all, let's take a look at the theory. Let's take a look at this theory of oscillator divergence. As usual, let's draw in our market. So our random market's moving lower and lower, like so. What I'm going to do next is put in our oscillator bands at the bottom. If you remember from last time round, the RSI has two bands. If it's above 70%, the market's said to be overbought. If it's below 30%, the market's said to be oversold. Let's put those in. So at the top we have our 70% level, and down here 30%. So typically the RSI is going to follow a same sort of pattern as the overall market, moving from one extreme to another, mirroring what the market is doing. But it's when we get this sort of setup here. So you'll see the market has moved lower, confirming the trend is down. But our RSI has actually started making a higher low. So this setup is known as bullish divergence. It's a suggestion that even though the market is still weak, it may not be as weak as it has been. That downtrend may well be running out of steam because the RSI has started making higher lows. It's as if the RSI has started going into an uptrend. So this bullish divergence setup can be a suggestion that the trend is about to weaken or maybe even reverse. Now this is bullish divergence. Of course, for every positive setup, there's a negative one as well. So let's continue on and see what happens when the market rallies. Right, so our market does in fact turn around, gain some ground, and manages to rally back and reverse that trend. Let's see what the RSI is doing. So again, typically our RSI is going to carve out a similar sort of pattern to the overall market. So we're moving higher, moving to the extreme when the market moves to extreme. But again, it's when we get this sort of setup. So the market has been moving higher still, but our RSI has actually made a lower high. So this setup is known as bearish divergence. The market's moved to fresh highs, but the RSI hasn't followed it through. So it's a suggestion that maybe that uptrend is starting to run out of steam, and it could be time to take profits if you're long, maybe even think about going short. It's not something that works all the time, but it's a setup that isn't that common. So I think when it does happen, it's one that is worth paying some attention to. So that's the theory of how RSI divergence sort of pans out on a chart. And I'm sure, as plenty of us know, it's one thing seeing it in a textbook, but when it happens in the real world of markets, it can be a little bit different. So let's take a look at an example from the US 30, the Dow Jones stock market index over the last few weeks. Now, I said these signals weren't that common. I thought what we'd have a look at here, this is the Dow, the US 30. So I've gone back to the third week of March when we saw that big sell-off in US stock markets. And I used this as an example last time round as to how the RSI can get it wrong. And if you're wondering, if you're logged into the platform, you can access these indicators from this button up here. If we click on there, you have the various indicators. And I've gone into most popular relative strength index and chosen a value of 10 for mine. So we're looking at an hourly chart here, so it's the last 10 hours RSI. But last time around, we were seeing how if the market sells off sharply, our RSI can go to an extreme very quickly. So if you're trading purely off these overbought, oversold signals, they can get you to go against the trend far too quickly. But there was a good example of divergence. It's not a perfect textbook example, but I think it shows how it works in the real world. So we saw this really steep sell-off for US stock markets, third week of March. The RSI goes below 30%, goes very oversold. It was the biggest move down. It was only just over 1%, but the biggest move we'd had for more than 100 days. The market sort of stabilizes, has an attempt, a very small attempt to rally, but then slips to a fresh low, so breaks below these old lows. But what is our RSI doing? You can see the RSI is not following suit here. So this is the setup. Again, it's not perfectly textbook, but this bullish divergence where the market slips to a low, a fresh low, but the RSI has almost started going into its own uptrend. So this can be a suggestion that maybe the worst of the trend, the worst of the weakness in this case, is out of the way. I think an aggressive strategy to trade this would be to be a buyer and put a stop under that recent low, because by definition, if the pattern, this bullish divergence, is going to be a valid pattern, the market shouldn't slip any lower. It's trying to pick a significant change in trend. So if the market breaks below these old lows, it does suggest the bullish divergence this time round hasn't worked. But there's an example of it actually happening in the real world on an hourly chart from the Dow back in the third week of March. We've not had any signals, divergence signals on the US 30 so far this month. So it does show that they aren't that common, but I think when they do happen, they're worth paying attention to. So that was bullish divergence. Like I said, the thing to watch this week could well be the political implications of this French general election. So let's take a look in a bit more depth at euro against the dollar. It's the most widely traded currency pair out there. It's always a popular one, usually volatile. So let's take a look at maybe a long-term and a medium-term view as to what we should be looking out for on euro dollar in the days to come. Let's start off by looking at the big picture view for euro against the US dollar. So what we've got here, this is a daily candlestick chart showing trading back starting August 2015 all the way to where we finished off last week. And you can see for the second half of last year, much of the story was of euro weakness. It slipped from 116 down below 104 by December. But we have seen sentiment turn round a bit since then. And interestingly, sticking on this subject of RSI divergence, probably the best example we've got of divergence here did happen when the market turned around. We saw here in November, the market slipped to a low. The RSI was oversold, no surprise there. The market rallied, pulling the RSI out of oversold, slipped lower again, so slipped to fresh lows for this down move. But look what our RSI is doing. We've got a higher low. So this setup here, this is bullish divergence. So this is a suggestion that maybe the weakness is running out of steam. It took a couple of weeks to play out, but you can see that this RSI divergence setup did mark a significant low for the euro and set up a rally of about 300 to 400 points. Now, where we are now, we have had what looks like a fairly gentle uptrend since the beginning of this year in euro dollar. So we can draw our trend line on this. And it's sitting just there. And you can see the weakness that we've seen over the last couple of weeks has brought euro dollar back down to its trend line. So for people who are following trend lines, they take the view, well, maybe we should see the market recover from here and target a run back up to at least these previous highs up in around about the 109 area. So that's about, what, 300 points from where we are now. We also have good support from last time round on the dailies. If we put our horizontal line on here, sitting just here, and that's the lows from beginning of March, around about the 104.90, 105 level. So there's a couple of, I think, important levels to watch from a daily point of view on euro dollar. But looking at the chart, we'd expect a bit of strength to start coming in here. Let's take a look at a shorter term view, the hourly chart. We can see that over the last week, the decline has run out of some steam. You know, we've seen the market stabilize from about the 10th of April, where it traded as low as about 105.70. And once again, it's not a perfect example, but we have the market making a low, poking slightly lower, but our RSI on the hourly chart setting up, giving us a small signal of bullish divergence, suggesting that maybe this could be important support down here. Let's see what happens. But we have seen the market gain a bit of ground in the middle of the week and then sell off. But we can see this sort of 105.70 area has provided good support for euro dollar. So I think it's going to be a really interesting one to watch this week, bearing in mind that we could have some volatility ahead and immediately after the French elections. It'll be interesting to see if the euro does sell off. Is it going to hold over these old lows from last week? Bearing in mind this downtrend has run out a bit of steam and we have seen some stability creep in. Of course, if the market starts to push below that low, all bets are off, all bullish bets are off, and the suggestion is sentiment is once again negative. But I think euro dollar, bearing in mind, you know, what's going on in the political world over the next week or so, is going to be an interesting market for us all to keep an eye on. That's it for this week. As ever, it promises to be potentially another volatile one for all sorts of markets. If you like the video, make sure you click the thumbs up below. Don't miss out on any of these videos that we do. The next one will be out next week. Click on subscribe and you'll get notified when the next one gets uploaded. And of course, if there's anything you'd like us to cover in the future, just leave us a message in the comments below. But for this week, from me, David Jones, and Trading 212, we'll wrap things up there, and I hope you have a good trading week.